through a Google search.
Hey guys, how y'all doing today? Got home on time this week, so I figured I might as well just jump in here and do this live. That way if anybody wants to ask any questions or anything they want to say or share, that'd be awesome. Or if you even just want to come in and tell me how stupid I am, whatever. Marty, I was wondering what that envelope from Wisconsin is that might have been yourself. That is me. That's your, Marty, that's your gift card from Trivia Night. Yes, sir. I was wondering if you got that. Let me know if you got that. Thanks for playing that night. Had a good time. We did some trivia last Friday night for a 1,000 subscriber giveaway. Played some trivia and gave away some gift cards. And Marty was a big winner. Marty was the biggest winner. He won a $75 Lowe's card and something else. He won the grand prize. So that's pretty cool. So yeah, anyway, we get together every week and let's talk about finance and money. Anything we're doing on the side, make extra income, what we got paid. Sometimes people share their experiences here. Maybe they just paid off some debt or whatever. Not financial advice, just kind of something outside of trucking to add some resilience to your life. But somebody asked, main reason I wanted to do this live, I don't script this here. I just turn the camera on and talk. So sometimes I slip up, whatever. But a viewer, Amigo Jones, Marty, I don't know quite how to take that, Marty. Marty says, did I tell you how handsome you are? I don't know quite how to take that, Marty. Come on. Anyway, Amigo Jones wanted to know how we select investments and stocks and stuff. So I just jotted some notes down here and give some basics of what I do. What I do might not be right. It might not be what you would do, but it's what I do, and it suits my purpose. So then after that, we'll just talk about what happened this week as far as investment income or passive income. I had a couple new things here. I added a couple and kind of got a new thing going here. So first of all, when I'm looking at a stock, something like that, it's got to suit my bigger picture of what my goals are. I like, as everybody probably picked up on by now, I like income over growth. Not that growth is wrong. It's just me, what I'm looking for. So I look for big companies that are like dominate their sector. They've been around a very long time. They call them world dominators. Companies like a 3M, Procter and Gamble, Johnson and Johnson. They're number one or two in most of their categories of stuff they make. That's my first criteria, and I also like that if they pay a dividend, because I want to earn income while I'm, waiting for that growth. These companies tend not to grow very fast because they're big already. So I don't expect 10% growth like you get with a Tesla or anything like that. And I'm okay with that because I get paid to wait, basically. So that's the first thing. Pull my notes off here because I wrote a lot of stuff down. I don't analyze growth stocks. First of all, I'm not good at it, for one, and tend to stick to areas I feel more confident with. So for any growth type investments, I leave that to a mutual fund or an ETF. That's where I put my money for growth, because there's a lot of tech involved, different growth things. That's out of my realm. It's not my world. I guess I'd be more akin to what our grandparents would be into, chewing gum and tobacco rather than computer microchips, I guess. But if you saw my last Trucker Money at the end there, I went over some of the best performing stocks of the last 20 years. Now, one of them was a tech company. You wouldn't have expected. One was Old Dominion Freight Lines, a trucking company, and then Tractor Supply Company and Monster Beverage were the top three. And it was just insane, the amount of money. If you haven't seen that, go back and at least watch like the last 5-10 minutes of it. 5 minutes, I don't know. Pretty interesting. We talk about it, and thinking there's no money in trucking, and we're just looking at it wrong. There's more ways to see things. We just got to open our eyes and find it. L Stacker Adventures says, yo, hi everyone. Hi, L Stacker. How you doing today? So profile, that's the biggest thing. Does it fit my profile? Next, I'm in this for decades, not days. I'm not a day trader, not a swing trader, things like that. So the current price doesn't enthuse me all that much. Sometimes I'll overpay if the price is too high, a little bit, pay a premium for good investments. And because I'm looking at 30 years from now what it's going to be worth, not what it's going to be worth tomorrow. So I always look at it that way. It's long term, not short term. Then I want to know, how many years they've paid a dividend, and are they growing the dividend? If it's new to them, if they've only been paying for like 3, 4, 5 years, I consider it as long as they're growing it. But if they're a newcomer, only been 1 or 2 years, they're likely to cut that in a time of need, such as right now. Not to saying a company that's been around a long time can't cut it, because they certainly can. But I like a very long term. Like a lot of them, I have at least 25 years of dividend growth. Some of them are over, I think 3M is 64, 65 years, something like that. Johnson & Johnson is right up there. A lot of these companies have been paying for a very long time, and they're increasing it. So I look for that. Okay, when you get the revenue, I like to see rising revenues year over year. Now, with all this said of what I'm about to say, right now in this time that we're in right now, I give major leeway to a lot of these companies, because this is ridiculous times we're in. And you watch TV and these people predict revenues and predict growth and this and that. They're full of crap. We live in such an unpredictable time. Nobody can tell you what's going to happen tomorrow or next week, next month, before or after the election, before or after the beginning of the year. So in my opinion, they're full of crap. Hey, thanks, L Stacker. He says, smash the like button. Thank you, sir. So I give some leeway to analyzing stuff right now. You kind of got to say, okay, this is what it is now. This is what it was. What do I think the future of this company is in 5 years? Because it could be shaky for years to come. Nobody knows. And don't let them fool you otherwise. Even the experts, they don't know what's going to happen in a couple months. So rising revenues, a history of rising revenues. I like that. And if right now all they're doing is maintaining, it's a big company like McDonald's or somebody, I can live with that for right now, because they're going to be okay probably. And then next, in relevance to earnings per share, that's what a lot of people look at for the number to use if they're growing revenues, if they're growing earnings, this and that. But in my opinion, earnings can be kind of skewed. I don't want to say manipulated, because it's not intent. The way they get skewed is through like depreciation, one-time charge-offs. Like a couple of years ago when they changed the tax law and all these companies took one-time charge-offs to bring foreign revenues home, repatriate them to the United States, they took big hits in their accounting. Now, those are one-time deals. They didn't lose money. They just had to pay a bunch of taxes. And a lot of them, it made them look like they had negative earnings, but they didn't. It just looked that way. So always got to consider those things in. So I like to look at free cash flow or funds from operation when looking at this, rather than just earnings. I'll look at earnings too, but I like to see free cash flow rising and funds from operation rising. And then you can see profit margin. Are they maintaining a steady profit margin? Is it rising? And I relate that to the size of the company. Like a company like Coca-Cola, huge, such a huge company, they will have trouble growing at any kind of a rate. You won't see 10% growth every year. You might see 3, 4, 5, 6, but a company that size, I'm okay with that. It's like fuel mileage. It's harder to go from 9 miles a gallon to 10 miles per gallon because you're already so high. It is to go from 5 to 6 because you're already starting out at lower points. Just that law of diminishing returns. But all in all, I'd like to see earnings per share rising, free cash flow, and funds from operation rising in relation to the size of the company. So we talked about that. And then especially in like REITs, real estate investment trusts, and even somewhat in utilities, because they're both very capital intensive businesses. They take a lot of capital to run those businesses. Utilities, that's a big infrastructure. It takes a lot to maintain them. So it can skew their numbers a little bit, and they operate on smaller margins. But the thing is it's regulated. So their margins are kind of set by the government. So seeing them with like a 3 or 4% margin, say for instance, and it's always been that, doesn't mean the company isn't growing or getting bigger. It's just the way the regulations are. They can only charge and profit so much by law. It's the way it is. So when they get big expenditures, they have to spread it out over periods of time, and that can make numbers look a different way. Okay. I love utilities, by the way. Just invested in a new one this week, so we'll talk about that here in a minute. We talked about kind of rising revenues, growth of the size of the company. Growing, expanding, two completely different things. Yeah, you're right. You're right. You can expand with no financial growth. Growth, like if the company stays the same size, but you grow your revenues, that's a good sign. You know, you're probably increasing your margins. So there's a lot of different ways to look at it. And different industries are, you got to look at them different ways. Like I said, REITs and utilities, very capital intensive, and it will skew earnings per share because of all the depreciation. Sorry if you hear that crunching. My dog's behind me on the floor there chewing on a bone. She's happy to see me. I got home. Dad got home on time this weekend, so she was pretty happy. All right. Now, in relation to the dividend, like I said, I like to see that they're growing their dividend every year. We'll call that compound annual growth rate. I think the average for the market is 3 to 7%. So I don't know why they just don't call it 5%. That's dead center between 3 and 7. So I just like to call it 5%. And that, again, too, depends on the size of the company and the industry. Certain industries tend to have a higher compound annual growth rate, like banks. Banks tend to have a reasonably high starting dividend and also a high compound annual growth rate. Utilities tend to generally have a decent starting yield, 4 or 5%, but then they don't grow it as fast. But I can take that because with the higher starting yield, you get more current income. But you sacrifice growth over the long term. But still like to see that they're growing it over the course of time. I want to see that they can cover the dividend. And for that, we look at payout ratio. The payout ratio is the amount of money they pay out in relation to their earnings. So if they earn $1 per share and they pay out in dividends 90 cents a share, that would be a 90% payout ratio. That's high. Kind of generally accepted safety point is 60 to 65%. But the ending too, that depends on the sector, because REITs are required by law, to real estate investment trusts required by law to pay out at least 90% of their earnings and dividends or distributions, however they want to do it. There's master limited partnerships are also like that. I stay away from them because they can have some funky tax consequences in reporting, but they can be good investments. Others, utilities tend to generally have a higher payout ratio. Bigger companies that are giant companies will have higher payout ratios, and they can support that. And the reason they pay out more in dividends is because they don't grow as much. So you have to reward the shareholders somehow. They're not going to, if you're going to invest in Johnson & Johnson and get a ton of growth, they're not going to grow 10% every year. They got to pay you a rising dividend. That's the only way to otherwise, why would a shareholder invest if they're not going to get appreciation on their investment? So they pay a good dividend and they have a pretty good compound annual growth rate. So I hold Johnson & Johnson. It's a good one in my book. So we talked about growing the dividend and covering the dividend. If they're paying out 100% or 110% of their earnings in dividends, that's not a good sign. They can support it temporarily. But then again, too, it doesn't necessarily mean they can't cover it. They can't cover it out of current earnings, but they might have cash on hand. They might have assets to sell, to borrow against. It can be a lot of times it's a temporary thing where you got to dig deeper into the numbers to see, okay, are they really paying out? Or did they just have one of these things like I talked about earlier, like a one charge off that will make their earnings number look really bad because of GAAP accounting. It's the way it's generally accepted accounting practices. The way that's done, you have to take depreciation out of earnings. When depreciation is a paper loss, if you understand that, it's not really real. So instead of earning $3 a share, it might make it look like you only earned $1.50, when really you earned $3. But that's going to make your payout ratio look high when it's really not. So a lot of times you got to look into that. So there's that. We like to look at that. What else do I got here? Debt. Debt's kind of a big one in my book. Debt to capital, things like that. They can't have too much debt. Everybody is really hot on AT&T right now. It's one of the hottest dividend investments there is. Everybody seems to love it. I'm kind of lukewarm on it. They got a lot of debt. I think $150 billion in debt. And they have new management that says they're taking an aggressive stance on debt. And I like the way they are paying it. They've decided they're going to pay it down, which is great. If they can, they decided that about the time that this whole pandemic situation hit. So that's going to be tough now. But if they can, that's going to be great. That's going to end up being a great investment. So I'd chosen Verizon over AT&T, but now Verizon is starting to rack up a lot of debt. So kind of wait and see. Might jump into some AT&T. I don't know. We'll see how that old debt thing goes. And Disney is going to eat AT&T's lunch with the whole Disney Prime thing. AT&T got into DirecTV, and that's a dying industry. So there's too much risk and turmoil in that for me right at the moment. So those are some things that I look for when I'm looking to stick some money into something. I got a watch list a mile long, and there's some things I've been wanting to do for a while. And not that there's any particular great reason to buy them right now, other than I wish I would have 10 years ago when I started looking at it, and I didn't. So I just decided maybe it's time. One of those things is water. I think there's a big future. This is merely my personal opinion. It is not in any means actionable advice. Wars are going to be fought over water. They're leading us to believe that there's a shortage of clean, drinkable water in the world. The world's population is ever growing. Countries are having trouble getting along. A lot of countries depend on other countries 100% for their water sources. And for various reasons. Water is something we have to have. We can't live without. Absolutely cannot live without. So I've always been kind of looking for a way to invest in water. And several years ago, I came up with some. I put them on my watch list. I haven't done anything, but dang, I'm kicking myself because it's been one of the best investments over the last 15 years that you would beat the pants off the S&P. Not that I give a hoot about beating the S&P. Now, wanting to invest in water and the fact that I like to find hidden gems that other people don't really know about. They're not popular. I found one, and I like it. I could probably do better, but there's a company out in Pennsylvania called York Waterworks. They kind of meet some of my criteria here. They've been paying a dividend for over 200 years. They're the oldest paying dividend company in the country, as far as I can find. They started in the water business. I believe they might have been the first company on the East Coast. Their first water system was hollowed out wooden logs that they set up through the city, and they piped water through the city and hollowed out wooden logs. James Madison was president when this company started paying a dividend. That's York Waterworks. And I've been watching them. I started watching them, and they were like $30 a share. Now they're up in the mid 40s. They pay a dividend and all that, and they've beaten the pants off the S&P for like the last 10 years. So I finally put some money in that this week. Not a lot, just a little bit. There's others I've been watching too. American Waterworks, Aqua America, and then some companies that they service the water industry, like A.O. Smith. They build water softeners, water heaters, fittings. Then Roper Industries, Danaher, I think a couple others. They're just on my watch list. I haven't done nothing, but I may someday pull the trigger. We'll see. I only got so much friggin' money to go around. And then, so their current yield for York right now is, I look what I did to my notes. Friggin' tore them in half. Such a bonehead. 1.58%. That's not great. When I first started looking at it, it was almost 4%, but the price has gone up so much. And then also this week, two other new positions. UGI, they're a propane company. They own AmeriGas. They're a national propane distribution company. They own pipelines and whole distribution infrastructure. Been wanting to get into something like that. And something I've been on the fence on for a while because don't have a lot of confidence in real estate, commercial real estate right now with everything that's going on. But this company just posted a pretty good quarter, last quarter, and that's Stag Industrial. They're a REIT, a real estate investment trust, and they hold industrial real estate. And it's everything going on with outsourcing jobs and not a lot of industry in the U.S. anymore compared to what it was. I was kind of hesitant, but then I found out that they have some exposure to Amazon. They hold some Amazon properties. So it kind of swung my mind. I don't like Amazon as a whole, but I guess if you do business, like take a company like International Paper. I don't own International Paper, but they make all, those boxes, those millions of boxes that Amazon goes through every day. International Paper makes most of those. I've not looked at that. I don't need a paper company. I am soured to paper. I live in paper capital of the world, and the drama that goes on with these paper mills is just ridiculous. So I don't want nothing to do with it. But businesses that have exposure to Amazon tend to do well, especially if they have a good relationship. So I picked up a little bit of Stag Industrial at 4.37% yield. And then the other new one, we already talked about all three. That was it. So, and then I got paid, 3 companies paid me this week. Clorox is one. That's my biggest individual holding right now. Individual single stock is Clorox. Yield of 1.98%. Almost doubled up on this one. Started in this one 2 years ago. And at 100, I think my basis is $129 a share, and it's up to 200. And last I checked a week ago, it was like 227 or something like that. So just by growth, it's become my largest individual holding. Didn't start that way. When I say individual holding, that's outside of mutual funds, ETFs, stuff like that. And then AbbVie paid this week, 4.99% yield. That's a pharmaceutical company. They just bought out a company called Allergan. So they might have some good things coming in the future. We'll see. And then Realty Income, once again, every month about the 15th, 4.5%. They paid. So I almost, last week I talked about accidentally did something good where I set up accidentally a portfolio that pays 52 weeks out of the year every week. Well, come last night, I got to looking and I'm like, oh crap, nobody's going to pay me this week. Sometimes they adjust their payment date. Like last year, if the 14th fell on a Monday and this year it falls on a Friday or something like that, it'll screw up the next year. Whatever, it doesn't matter. It's still getting the money. But I'm like, oh crap, last week I talked about we get paid every week, and this week I ain't getting nothing. Well, I thought 14th was Monday. 14th was today. So I ended up catching a few of these. Other than that, and we talked about that Mudflap app, made some passive income off of that. Let's see here. I got my app right here. A lot of people downloaded that and signed up, but only 2 of them actually bought fuel. So you don't get your $10 credit until you make your first fuel purchase. So that was $20.74 to me, and I just get that as a credit on my account. They don't send me cash. But the 2 people that did use it gave very positive reviews. So if you buy your own fuel, download that Mudflap app and promo code DIY Semi, you'll get $10. I'll get a $10 referral fee. And the one gentleman Really nice guy. Cash is King Trucking. If you watch him, tell him I said hello. If you don't, definitely subscribe. I know a company he's leased onto, they fuel at the Loves, and he said he got 19 cents a gallon above and beyond what he would have gotten with his fleet card, his company's fuel card. So even if you're leased to a company, definitely check it out. You might be getting better pricing. It's pretty slick. So, or check it out. Don't check it out. At least download it. You can download it without signing up. Download it and check the prices for yourself. Now, a few people downloaded it. They were pretty disappointed. There wasn't very many fuel stops in their area. It's getting there. Yesterday I got an email. There was 4 new fuel stops added. One of them was in Pennsylvania. So that Northeast, they're very slim on fuel stops in the Northeast. I think Albany, New York is the farthest one north and east, I believe. And then also out in the Northwest, it's pretty slim, but it's getting there. But man, around that center part of the country, all the way from Colorado or whatever to Pennsylvania or Ohio, there's fuel stops everywhere. And they're usually pretty good pricing. So like I said, you can download it and look at the fuel prices without even signing up. If you decide to sign up, use that promo code DIY Semi, get yourself $10 free in credits after your first purchase. So let me see if I missed anything here to talk about. Oh, that's pretty much it. I just thought I'd jump on here live. I got the chance to do it from home today. I got home on time for once here. I've been pretty late the last few weeks. Actually spent a couple weekends on the road there. I don't normally do that, but if you're going to make money while the money's there, rates seem to be pretty good. Oh, too, might as well talk about that for a minute. A lot of people ask why I don't give out numbers as far as my freight rates or investments and stuff like that. As far as like freight rates, there's a lot of people that do that on YouTube. Doesn't need to be one more. And some people kind of mislead. They show you rate confirmation. Oh, I got $5 a mile on this load. That's great, but you don't do that every load. So to only show the good ones and never show a bad one, I kind of feel like that's just a little bit misleading maybe. And maybe it's not doing anybody any service. But there's some guys that do it really well. Cash is King Trucking does it really well. And he talks a lot about it. Does a great job. And BOC Enterprises, he does that good too. Hey, band, that's Mike. Hey, buddy, how you doing? Those two guys do it really well, and they're both very smart. So my concern is more to do with what do you do with your money after you make it, and your margins. It doesn't really matter if you make $5,000 a week, and I make gross $4,000 a week. If you gross $1,000 more than me, I want to take more than to the bottom line than you. That's my thing. I want better margins. I want to work less and make more, if that makes any sense. So to me, gross, it doesn't mean much. It's nice to see, like when Cash is King Trucking does his, that's motivational, man. You can see that, and this guy's going out and killing it. I can go out and kill it too. But, hey, we were just talking about you. Cash is King Trucking just got loaded in Minnesota. We're talking about your videos you do with giving out your numbers and stuff. And I was just telling him you get a good job. And some people were asking why I don't do that. I said, well, you're already doing it. And I like to focus more on what you do with your money after you make it and keeping more of it, improving that margin. And I know you're the same way, Cash, that you want to be the guy that the other guy could make $7,000 a week and you make $6,000 a week, but you take more to the bottom line than him. It's all about that bottom number, the profit number. So to me, I don't want to mislead anybody with, and like you said too, Cash, that some people give out these rate confirmations showing they made $5 a mile on a load, but they don't show the next one where they got $1.40. And I don't think that does anybody any good. And you're pretty honest about that. You say when you got a backhaul that sucks. I think you know who I'm talking about. One of our mutual friends that we watch here talks a little bit about that, BOC. So he's pretty open about that. Also a very funny guy. But anyway, so that's why I don't share numbers on that. And the reason I don't share my actual numbers on my personal stuff, I mean, I'll discuss percentages and margins and stuff with you all day long, but I'm entitled to some privacy. I know I do this on YouTube, but I got a family, and they're entitled to a certain amount of privacy, and my wife and stuff. And it's not smart to go on YouTube and put a target on yourself. And I don't need that. So, and it really doesn't matter, because say I have $1 million and you're starting with 100. Well, it's going to make you feel like crap. If I sit here and talk about millions of dollars all the time, you're going to feel like, man, I can never do that. And that's not true. I started there. You always start with that first $100 or $1,000. And I just want to show you how to get there. Band says gross doesn't matter. Big carriers love telling you about gross. You are exactly right. You're exactly right, Mike. It's what do they call it? The old bait and switch. You're going to gross $7,000 a week. Well, get you pumped up to believe that you're going to make $7,000 a week, but really they're going to get $7,000 a week. Take 20% off of that, leave you with $5,600. And then out of that, they're going to take all these bull crap charges that they should be paying. Even some of the bigger companies, I've seen guys sitting in a trust stop talking about the deductions out of their checks. And I'm like, what in the hell are you talking about? I know England for a while was taking something out called differential. And I'm like, what in the hell does that even mean? Differential. So I don't fall for that. Read any contract you're going to sign, please. And if you don't feel good about it, have somebody else read it. Find somebody that's been in the industry, spend a couple $100 here, whatever you got to do. Band says, yes, you do. Probably. At least looks like it in your vids, big baller. No, we're not there yet. I don't know. I don't have a good rosy feeling about the future. I wish I could say differently. And Mike, you know what I'm talking about. Some of your videos, I agree wholeheartedly, but you know as well as I do that you have to watch what you say and what you do. And I take the position that the future might not be bright and rosy, and it might be really bad, but we don't know. Someday it's going to be. No one in their mind does. You're exactly right. It's going to get bad someday, that's for sure. Will it be tomorrow, next week, next year? I don't know. It could be, maybe not in my lifetime. It could go on at this rate for a long time. I've just decided that I'm not going to let that get to me, because even if I'm not here when it happens, my descendants will be. I continue to plug along, hoping for a good future and planning otherwise, because the alternative isn't that great. And we all got a life to live. I don't want to live it being you can end up being a slave in your own mind, and then somebody else can enslave you. And I won't go too far with that. I don't want to get political. And really, it doesn't matter. It's not only politics. There's everything right now is just so negative. Maybe Mike says, staying out of debt is a good idea. You're exactly right. Debt is a form of enslavement. Dave Ramsey's right about that. We've said it. I'll say it again, because we've said it before. My wife and I in a video, we just recently paid off our house. Don't have really any other debt, just day-to-day stuff. And it's liberating. And that's part of the reason I do this, is I want everybody to feel that feeling. We make a decent income for average blue collar Americans, probably better than most of us could do in any other line of work, because most of us don't. We don't have a college degree. Some of us do. A lot of truck drivers that are highly educated. Kind of puzzles me. You spend all your life and all your money going to college, spend $100,000 going to college, and then just kind of walk away from it and go do this. But I guess everybody has their breaking point. You can only handle so much. But anyway, it's a good income. Maybe not as good as it used to be. Some instances maybe it's better. But I really encourage everybody to make the most of it. Oops. Lena. Shh. Oh, the wife just got home from work. Now I'm in trouble. Hi.
Hi. Sorry.
We're on the YouTubes.
Oh, okay.
Talking to 5 million people.
Lena, go get her.
Sorry about that. The wife gets home from work and my security dog goes and attacks her. So Mike says, nothing wrong with making money. You're right. You're right. There's nothing wrong with making money. It's what you do with it. You can do good things. You can choose to do good things. You can choose to do bad things. Money doesn't make the person. It shouldn't anyways. If money makes you who you are, then that's a flaw with yourself, or it's a flaw with me, you know. I want money to do what I want it to do and feel good about it. I've had this feeling for a while of, you get to a certain point, you might as well start doing good things. Start leaving big tips if these restaurants ever friggin' open again. You know, being truck drivers, we see a lot of middle America waiting tables and stuff. How many times have you been in a TA or Petro and have a waitress waiting on you that's 7 months pregnant and just dead on her feet? If you got the money, leave her $100 tip and walk away. See how that makes you feel. Don't do that for her. Do it for yourself if you want to. But see how it makes you feel. That'll tell you a lot about your character. Is doing something like that for somebody else. And you don't even have to tell anybody about it. In fact, if you don't tell anybody about it, that's even more of a testament to your own character. But do things for people if you can afford it. And I want everybody to get to a place where they can afford it. Mike says, let me drive that tractor of yours. Hope it's working out for you. Which tractor? The big orange tractor? I got a lot of tractors. I have literal tractors and then my tractor trailer. Oh, I know the one in my video. You can come drive that. You can come drive. I got funner ones to drive. I got some old stuff, some old Farmalls and Minneapolis Molines. How's everybody doing out there with freight and getting by and everything? Mike, I know you got a couple trucks going there. You still got that second truck on the road? If you're still in here? Oh, maybe you jumped out. I think I might have lost my connection here. We back? Oh, okay. You're there now. I was just wondering how you're doing out there for freight, if things are looking up for you. I know you just you got that other second truck on there. How's that new truck working out for you? You don't do videos on that anymore. Or actually, if you're driving, you probably shouldn't be typing, so maybe I better not be asking you too many questions. Yeah, better not. Okay. Anything anybody else wants to talk about? Otherwise, I'll punch on out here and let you all get back. I imagine most of you are probably watching while you're driving. That's what I've been doing. I watch a lot of live chats while I'm driving. Watch Cash is King. Cash is King says, I got a pretty good paying load this morning going to Florida. 2 picks, 1 drop. Florida. Man, you're going to get nothing but sailboat fuel out of Florida. Go down there for good money, come back for owing them money. Just teasing. I'd go to Florida too. I got to get pretty good money to go to Florida though, because I don't have any connections down there. I try to stay out of there. Mike says, freight's been really good for me for now anyways. Yeah, man, you got to make hay while the sun shines. I've been staying out a little more than I usually would. Just trying to get some extra loads in and stuff. Well, I don't know. I don't know what's going to happen here this fall. Too much stuff going on with the elections and the whole pandemic thing. I don't like what people are saying about that. Mike says Midwest to Northwest, nothing less than 5K for dry. Really? Good for you, man. That's a great rate. Holy cow. What kind of rate are you getting out of the Northwest then right now? And coming back 4 to 5K? Holy cow, man. I got to come work for you. That's a good rate. Wow. I'm guessing that's probably out of the Missouri area, Kansas City or St. Louis area. or central Missouri. That's awesome. That's 9,000-10,000 round trip. I'm guessing you probably turn that in a week. Which leads me to my next question. Can I borrow some money? Holy cow. Well, actually, can I just have it? I don't want to borrow it. I want it PPP style. I don't want to pay you back. Come on, man. Cash is, yeah. I don't think I'm going to get that money from you, am I? Cash is king. What the heck do you do out of Florida? Or you just deadhead up to Virginia for one of them loads? Yeah. That's pretty good money for dry. Holy cow. That's got to be 1,400 miles maybe on $5,000. I don't know. I don't know what the number is. That's pretty good though. That's really good. Maybe I better deadhead down to Missouri to get my outbound freight. I'm surprised that orange truck holds up through all them mountains though. Mike, did you get that fan and switch installed in your truck yet? I don't know if you saw that. I think you saw that video because I think you commented on it. I know you wanted to put that fan switch in your truck. I hope that's easy enough for you. Tried to make it easy. Didn't want to do that on the electrical side because pretty sure that fan is wired right to the ECM. I don't know if that, well, no, it's not. It's fused, but even so, I don't want anybody doing that on a newer truck. They're really touchy on electrical. He says, no, I didn't do it. I'm lazy. You're not lazy. You're just tired from working. It's on my list of things to do. I got one of those about this long. I got a bunch of things to do on the truck, but on the weekends I've been home. It's been so friggin' hot. There's some weekends I was on the road, can't do the things then. Maybe this weekend I'll get some stuff done, but I got a short weekend. I just got home and I got to leave out early on Sunday, heading down. I had a load to Kansas City and then Kansas City up to St. Paul, but that canceled. So I guess I'm going to Columbus, Ohio, and then Columbus back to Wisconsin. Be back in Wisconsin on Monday night, I guess, and go out again. While freight is hot, I'm trucking. That's a good idea. That's what I'm doing too. A lot of things I need to do, but they're just going to have to wait because I want to be prepared if this winter goes sour. Something tells me it might. I don't know. Who knows? You never can tell. Could be great too. We lost a lot of carriers during that March, April time, but sir, right back to not being able to find a parking spot at night, aren't you? Mike says, I have suspension freight. We'll be going away soon. It's going to be ugly. Oh, sorry to hear that. Oh, I have a suspicion freight will be going away soon. It's going to be ugly. You beat me to it. Yeah. I don't know what gives me that feeling. I know things are good right now, but does anybody have a good feeling about it, that it's going to last? I just got a feeling, even though rates are good and freight is good, I just feel like it's shaky ground. I don't know why. It just feels that way. Cash is King says, I'll have to make some calls for a load out of Florida Monday. I'll figure worst case scenario, I'll throw $250 in fuel and head north after I get unloaded. Yeah, that's not a bad plan. Oh, I did get that credit from you on the Mudflap app, Cash is King, just so you know. So I appreciate that and appreciate all the support. I try to jump in your live streams as much as I can, usually while I'm driving, so I don't comment a whole lot, but I usually catch the whole thing. I enjoy listening and enjoy some of the people that come in there. The BOC did that 5-hour live stream the other day. I listened to the whole thing. He just had me freaking rolling. A lot of times he'll jump on in the middle of the night at midnight and do a live stream, and that keeps me awake at night. That's always fun. He's a little rough on some people, but I think it's all in good fun. At least I hope it is. And Cash is King. Yes, Georgia and Alabama pays way more than straight up from Florida. Yeah, I hate that. I hate the fact that you go somewhere and then you got to eat it coming back. I have a real problem with losing money hauling freight. If they want to pay you 70 cents a mile, they can keep it. I don't care if it does pay for my fuel. You can friggin' keep it. I'll pay for my own damn fuel. You pay your freight bill. It's kind of the way. That's kind of why I don't go there, because you got a pretty good chance of getting caught. Even certain times of year, you could deadhead up to Georgia and still take it in the pants. So I just don't usually go. You make enough money running around the Midwest usually. Mike says even with deadhead, it's still more money. Yeah, it is. I would deadhead up there. For as many people as there is in Florida, they sure don't make a damn thing, do they? They sure don't ship anything. So I ain't taking them nothing. Plus, it's hot down there. When I used to flatbed, it was a flatbedder, and we had crane-equipped trucks. We had to unload our own products. It was all like site furnishings for outdoors. And you were on and off the trailer. It was all LTL, so you were on and off the trailer. You had to rig your own stuff and then crane it off and set it up. And on the trailer, probably 30 times a stop, maybe 50. And in that friggin' heat, holy crap. I don't know, I didn't die, for crying out loud. She certainly was in much better shape, but that heat down there is just oppressive. Same with Texas, but I'd take the Texas. At least you're not, drenched in sweat. But that Florida heat, I'm not built for that, man. Holy cow. Mike, you ain't built for that Florida heat either. You better stay out of there. Although I guess it's probably a good diet plan for all of us, huh? Actually thinking about making a small business move, but I haven't talked to my yet, so I can't talk about it here on YouTube yet. With a reefer, Florida and Georgia is ugly. Even produce don't pay what it used to. Yeah, man. And I ain't touching a produce load for $1 a mile. They can keep it. Half the time you get where it want to go, they want to friggin' reject it anyways. That's why I live in potato capital of the world. Well, second, I guess Idaho would be the first up here in Wisconsin, but I won't touch their stupid potatoes because half the time they knowingly ship bad potatoes, and you get there and they have low cores in them, and then they want to reject them, and then it's your problem. They don't want to pay you to take them anywhere. Potatoes stink. They smell up your trailer. And I won't touch bulk potatoes. They destroy a nice reefer trailer. Bulge the walls out. $300 washout because they're mashed into the floor. Yep. Romance. Mike says romance. What the hell are you talking about, romance? Oh, he says stupid auto correct. He says romaine. He meant romaine. Oh, okay. Romaine lettuce? I get you. You got to use that speech to text. See how that works for you. But anyway, yeah, I don't know. I don't usually touch produce in general. If it's one product and it's one pick, one drop, then we can talk. But I did enough of this sitting at places waiting for strawberries to come out of the field. And as I'm concerned, there ought to be a law against ordering a truck if you don't have the product. You knowingly don't have the product and you order a truck, you ought to be severely fined. And I don't care that it is produce. That's your problem. You want to talk about solving problems in this industry, they can start with that. And then on top of it, they're not going to pay you anymore. Produce a lot of times pays good, but as far as I'm concerned, it ain't good enough to put up with all the crap that they want to pull. And then get to the other end and they want to reject it, and now suddenly it's your problem because somebody shipped them rotten produce or crappy produce. I'll take less money to haul something else. They can friggin' keep it. Yeah. I give credit to people that do it. And now, too, I see on the broker boards they got 700-mile produce loads that they want to team. They only want that so they can abuse your freaking time, make you sit there and wait for the produce. But then when it is finally loaded, they can still make you run and bust your hump because you got a second person in the truck. And they don't want to pay a team rate. They want a solo rate on a 700 or 800-mile run, and pay no more for it. And they can go screw. I don't know why people agree to that, but I guess these big carriers, England and stuff with their teams, they can make their company drivers do it, I guess, but I don't know. There's just less and less money in things like that anymore. Used to be produce was the thing to do. I suppose seasonally out of certain places it still is, but when that hot season's over, I don't know, it's really even worth touching. I don't know. I haul a lot of cheese, and I won't haul potatoes, but I'll haul like French fries and frozen potatoes and stuff. A lot of that stuff's okay by me. I'd rather take a frozen load of French fries than just a refrigerated load of potatoes. I can get better money and less likelihood of it getting rejected. I hate that whole. And then the pallet game. Some places still want you in this day and age to play the pallet game. I ain't doing that either. But oh well. Well, I suppose wife's home from work now. I got to go take my lashings and walk the dog and answer why I haven't made dinner for her yet. So I'm going to punch on out of here. Thanks, guys, for coming in and being supportive. And all the channels in here, Cash is King Trucking, go check him out. Band, I see you changed your screen name again. I'm hoping you're still a channel. But anyway, check that channel out. Got some content on there probably want to see. See, do you have anybody else in here that had a channel? L Stacker Adventures. Definitely go check him out. I'm just scrolling through the comments here. And yeah, anyway, so y'all take it easy. I'm going to jump on out of here. And we will see you next time. Hopefully I'll have a good video up for you tomorrow. Take it easy, everybody.